how do we stop multinationals from shifting profits to tax havens?
Welcome to Ask an Economist. I'm Matt.
And I'm Eliza.
And we're economists.
Our next question is from Hayden, and he asks, we have a lot of tax loopholes and incentives in our country, which makes for an overly complicated tax system. Would taxing companies on revenue instead of profits be better for our country, especially when dealing with the global conglomerates?
Yeah, look, tax avoidance for big companies, particularly multinational companies, was a big issue for a number of years there. And while the recession and the pandemic has kind of pushed it away, I imagine it'll become a big issue again. And part of the problem with company tax is it's based on profit. And why is that a problem? Well, because the profit is your total revenue minus your total costs. And if a firm can inflate their costs, they can reduce their profits and reduce the amount of tax they pay.
Like when we make deductions on our personal income?
That's right, but they're in charge quite a bit of how much their costs are going to be. In particular, we've seen multinational companies sort of involve themselves in what's called profit shifting, and that's where within a company, a tech company say, that has an office in Australia and is selling goods to Australia, and an office in a tax haven, for example, somewhere, a place where they can pay really low tax. Basically, the company in Australia will pay a large licensing fee or some kind of fee like that to the head office in the tax haven, and that's actually a cost. So effectively the profit gets shifted because the Australian profit goes down because it's a big cost, and the profit gets transferred over to the tax haven. And that's the kind of thing that we want to try and avoid.
So companies can go and pay a lower corporate tax rate by shifting their profits overseas to places that charge them less.
Yeah, and the ATO has been, and the governments around the world have been trying to crack down on it. But really, the fact is, companies are paying a lot less profit, in the last 10 or 20 or 30 years, simply because of this practice. And so one way around that is to change the base of tax so that it's not profit anymore, it's actually revenue, because revenues are quite a bit different to fake. Like if you sell the good, then or service that you're putting to the market, then you get revenue from it. So it's harder to change your revenue levels, for example.
So why do we not see this type of taxing happening in countries around the world, Matt?
Yeah, so it's because it would tax differently, and so therefore different companies would be affected differently. So imagine you have a company where they sell lots and lots of goods, so they make lots of revenue, but they make a small profit on every single unit that they sell. So the way they make a large profit is by selling lots and lots of goods rather than selling a few goods for a big profit.
Like in hospitality?
Yeah, okay, so it's basically a really good example is petrol stations. They actually make less than 2% profit on their revenue. So if for every $100 of revenue that comes in, they only make about $2 profit. Whereas I think the average for most firms is about 50-50. So for every $100 of revenue that comes in, they make about $50 profit. And so if you had a company, if your business model was based on that high turnover, low profit, then because it's now based on revenue, you make enormous amounts of revenue, but not a huge profit. And so therefore a revenue tax would hit you harder than a firm that was making, say, jet engines where they only sell a few, but they make a big profit on every unit.
So if I've got this right, we don't have a tax on revenue because it would hit different industries at different amounts. We would disincentivize people to invest in certain industries that have high revenues but low profit margins.
Yeah, exactly right. And or just that we might send different industries even possibly broke. But it's not as bad as some people make. So that's the big argument against it. It's not actually as bad as some people say. So there are some countries, Honduras is an example, that actually introduced this. And what they did is they introduced it for some industries, particularly larger firms. So you had to be of a certain size before you actually paid it. And what was actually quite interesting from the Honduras example is that the profits that firms made went up after they introduced a revenue tax. So remember, if you're paying profit on revenue, then you have an incentive to reduce your profits, your official profits, suddenly, when they weren't taxing profits anymore, these firms actually increased their profits. So that's basically a sign that there was some tax evasion happening there.
And if you're interested in learning more about taxes, we also have another Ask an Economist episode where we talk about the Buffett rule, which is proposed to be implemented on income tax.
Yeah, so it's basically for individuals rather than firms. Now, so that there's no reason why we couldn't have a revenue-based company tax. It's probably just one that we would need to do more work on. And I certainly think that Treasury and the government should probably look into this and work out what kind of industries, what kind of firms we could actually do that, or what the implications of it are, because it's certainly a great way of stopping firms from avoiding tax. But even before that, that's sort of down the track, immediately what we could do is we could step in and we could start stopping profit shifting. And we could do that simply by saying, you can set your firm up any way, but any movements of cash between the firms, so from one part of the firm, say in Australia to overseas, or even within the country, none of those count as costs for tax purposes. So you can't use them to decrease the profit of one part of the firm and increase the profit of the other. And that's a very easy change that the government could make that would make a big difference, particularly to multinationals' profit shifting. If you'd like us to answer one of your questions, you can send one in to mail@australiainstitute.org.au and make sure you include Ask an Economist in the subject line.